All right, today I'm going to show you two stocks to load up on before earnings, and then two stocks you want to be avoiding like the plague. I wouldn't even be buying them with your money. Okay, that's the clickbait title for today. But for real, let's go look at two stocks that have a great setup running into earnings, and two stocks that I really would not be touching right now. So let's first start with, if you can imagine, Amazon. Now, listen, my wife personally funded Jeff Bezos's wedding in Venice the other day, with the amount of packages that come to our house because of Amazon. Maybe your wife is the same. I don't know, but my wife, that is definitely her. Now, looking at the Amazon where it's at right now, we've got some really interesting stuff. Right? Let's pop open the stock news over here. And what's really cool about this is it actually shows you if it's positive or negative. So you don't have to jump through the whole article here. Microsoft, Amazon, Apple, major US stocks wait for earnings. That's positive news. Amazon, a venture backed startup developing a fix for return fraud. That's interesting. If you invested $10,000 in Amazon 20 years ago, here's how much you'd have today. I don't know how that'd be negative, but is what it is. Four AI stocks that could soar, and I guess they're including Amazon in this, and think it's too late to buy Amazon. Here's the biggest reason why it's still time. Hang on. I'm actually curious about this one. Why is there still time? Why is there still time? Amazon Web Services is the largest cloud-based service in the world and could have the most benefit to clients as it moves through the cloud. Amazon's been one of the best investments money can buy over nearly 3 decades in the stock market. It's up millions of percents, right? But the growth story isn't finished. Let's see what their story is, right? There's a shift to the cloud. And of course, the Amazon Web Services is a huge part of their company. Is that it? I thought there was going to be more points here. Okay. Andy Jassy, the CEO, mentions almost every opportunity to shift to the cloud. AWS is Amazon's cloud solutions business, and it's the largest in the world with 30% of the market. And it's one of the company's fastest growing segments. So my wife is not buying Amazon Web Services, but she is buying every package she can from Amazon delivery services, basically. So taking a look at this, let's run Amazon through our Outlier 9 framework. Now, this is going to give us an objective reasoning if this stock is set up, if it's a strong buy, or if this stock is one you want to avoid with a strong sell. So all stocks have influence from the market, the sector, and then the stock itself. So let's go look at the 40% of the move that's influenced by the market. So first, we need to go to the S&P 500. We're going to go to the SPY. Click into here. We do see a buy signal right here on the SPY. We do see a buy signal. So let's go ahead and put that. And looking in here, we can see the SPY has a 10/20 price over 50. That's a bullish trend. The 10 EMA over the 20 EMA, price over the 50 EMA is the outlier trend template. And what's nice is it just color codes it green, so you don't even have to think about it. Yes, the market is trending higher. Next, we did get a crossover on breadth today. So I'm actually very excited about that. We have, let me go back to the full stocks here. I like to look at the full stocks. You can look at the S&P, you can look at the Dow, you can look at NASDAQ. I personally like to look at full stocks. Now we have all this crossover that just happened right here. So this is telling us how many stocks have buy signals versus how many stocks have sell signals. And we did just get a bullish cross on market breadth. So we can mark that green right here. Now, one thing also to note is that more stocks are getting uptrends. So if we use our brand new, soon to be patented donkey channels, we can see that this is pushing up higher, meaning more stocks are getting uptrends, less stocks are getting downtrends. That's exactly what we're looking for. Makes that super simple. So the market is set up. Now, this will apply to all the stocks that we covered today. Next, the sectors, right? The sector. Amazon is in the discretionary sector, and that's why I picked this one. Because looking at this, I did see the discretionary sector has a bullish crossover on breadth, meaning more and more buy signals in this sector. And if we go to the discretionary sector over here, and we look at the breadth over here, and we zoom in and click the donkey channel button, you can see right here, again, more uptrends in this sector, less downtrends. That's what we're looking for. More uptrends in that sector, less downtrends. So the breadth looks great in this sector. How about the fear and the greed? So Amazon's fear and greed score is right here, but the average fear and greed score for everything in this sector is this line right here. You can see the average fear and greed score is actually growing, getting more greedy, Because of that, we're going to mark that green as well. So we have the market and the sector all lit up green. Look at this, all lit up green. That is really sick. So next, let's go to Amazon itself, right? We covered how people are excited about Amazon AWS. We covered some AI headlines that are going on. And we also covered how my wife is buying everything she can off of there. How about the trend of the stock? Well, we do have the 10 over the 20, price over 50, and that green overlay makes it super simple to see that Amazon is in a bullish trend. Next, we can see a buy signal that came through a little bit ago, June 27th, and it's still active. So we'll mark it there. In fact, these buy and sell signals are only 198% returns. Only 198% returns. The fear and greed. Now we can see right here that the greed is growing and has been growing for quite a minute, right? It bottomed back here around 52 and has been progressively pushing higher and higher and higher each day. Now it's up at 60.48. So the fear and greed is growing higher. And then lastly, the order blocks are actually going to help it. So these are what we call outlier blocks. These are areas of strong support and resistance. And you can actually get these 100% for free using the free TradingView account. And then we have a free script where you can import this into your TradingView account to make your chart look exactly the same as mine over at OVTLYR.com. So how cool is this, right? You can have the 10 over 20, price over 50, and you can see we actually have bullish support order blocks underneath Amazon. So Amazon to me looks brilliant AF. This is 9 of 9, looks awesome running into earnings. Now remember, all stocks are bad. Every once in a while they act right, okay? All stocks are bad. Every once in a while they act right. But let me introduce myself. I am a random guy on the internet. My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So if that sounds good to you, go ahead and subscribe if you haven't already. Now let's reset this and let's go through this again for the next stock on my list, one that could be a great opportunity running up into earnings as well. Not just Amazon. Who's after Amazon? How about Tesla? Ooh, this is controversial. Tesla, controversial, right? With Elon getting involved in all the politics and all the stuff that he's doing, I own a Tesla Model Y Performance. I love the car, but I got to tell you, politics aside, he's so distracted, right? Between Twitter, which will always be called Twitter, it will never be called X, between Twitter, between his political ambitions, between Tesla, between SpaceX, between every single thing. He's all over the place. However, the stock might be set up. Surprise! Tesla's all over the place. I know. Check this out. Oh, yeah, sometimes he creates a wall, like a power wall, right? Another thing that he does. Because he's distracted AF, that gives me a little bit of concern. But let's take a look at some news stories here. Tesla, no margin meltdown, strong buy. Okay. Then a neutral story. Robotaxis are the balance sheet. Robotaxis and the balance sheet take center stage. Then a negative story here. Tesla's darkening outlook to test robotaxi vision. I do wonder about these news headlines if they are still political based, right? Because not that long ago, we all remember it, right? The Overton window was very small, meaning you could only say these things. And Elon was stepping around the Overton window. He would say whatever he wanted. And because of that, I felt like the media did everything they could on smear stories. Like anytime somebody was involved in an accident in a Tesla owner kills multiple thousands of people. We saw it all the time, right? Tesla explodes in fiery crash, right? How many F-250s also have fiery crashes? How many Suburbans also are involved in fatal accidents? Nobody ever talked about that. It was always Teslas are the worst, blah, blah, blah. So I'm curious if that has come over, if that has ended. I don't know. Just taking a look at this, right? Out of 1, 2, 3, 4, 5, 6 stories, 2 are positive, 2 are negative, and 2 are neutral. So maybe it shifted. I don't know. You tell me. Justin says it's funny because they'll ultimately be the safest cars on the road for sure. We'll have to see. Now, looking at this, let's run through the Outlier 9 once again. With the trend, the signal, and the breadth, that won't change. All of these stocks are going to have the same market. It's just true. And in fact, Tesla is still in the discretionary sector, same as Amazon. So this will not change. This is true. Next, we just can focus in on the stock. So 70% of the move is set up already before we even get to Tesla. So looking at Tesla, we do have a buy signal that happened on July 17th. The buy signals have shown 1,392% performance, not too shabby. So let's mark that. We do see the trend has changed not all that long ago with the 10 over 20 price over 50. So we have a green trend on Tesla. The fear and greed is growing, less fearful, more greedy. Now, I got to tell you, I was really frustrated around in March because, as I mentioned, right, I do own a Model Y, and we went on a road trip and we drove from Texas to Destin, Florida. Beautiful, beautiful beaches in Destin, Florida. Nothing like the beaches in Texas. They are awful. So this was in the middle of vandalizing Teslas, vandalizing superchargers, vandalizing people driving the cars. And I'm like, leave me the frick alone. I just want to drive my car on a family road trip. What is the problem with these people? So I think that at that point, there was probably all the greed, all the fear, definitely not the greed, all the fear with Tesla. And now we're looking at a way more greedy situation here in the stock. So the fear and greed is green. Now, any outlier blocks on top of Tesla? Let's take a look. No, it does have significant support though. Look at this giant support block underneath it. There is an order block, an outlier block way, way, way above it. How far above it is it? 22% higher? Bro, listen, if you are buying a stock and it goes up 22% and then runs into resistance, I think you've done pretty damn well. I think you've done pretty darn well at that point. So Tesla is my second of two stocks that you might want to take a look at running up into earnings. Now the dark side comes, right? The clouds are rolling in, right? The lightning is striking. What are the two stocks that I would absolutely not be playing into earnings? What are the two stocks I'd not be playing into earnings at all? Oh, actually, Tesla earnings just happened. I thought they were running up into earnings already. There we go. Now, that's going to be great. Let's see what happens after earnings. I have literally no idea. Nikolai says Tesla's down 6% after earnings. But you know Tesla, it could be down 6% and up 16% by the end of the day. Who knows? I'll be very honest with you. I didn't realize earnings happened. I thought they were happening a week out. So there you go. A little egg on my face. Let's go to the one I would not own. The first one, SoFi. Why would I not own this stock, right, Chris? The CEO is going to be paid all these giant bonuses once it hits these milestone targets. Of course, it's going to go up, right? Here's why SoFi stock is a buy before July 29th from the Motley Fool. They say July 29th, fintech innovator, blah, blah, blah. And even so, it could be just the beginning. SoFi's made some exciting announcements recently. There's some big catalysts that could result in rapid earnings growth in the next few years. With that in mind, here's what they'll be watching closely. First, it could report its best growth yet. They added more than 800,000 new members to its platform, and wouldn't be surprised to see even more additions took place in the second quarter. Now, there's a little more clarity on the Trump administration's student loan policies. Now, as much as people love the story of the stock, I don't. I care way more about the price. I care way, way, way more about what is the price action saying. And here's a great example, right? This person is basing their investing thesis on data that came out 3 months ago, on data that will come out in a couple of weeks, or I guess in a week. And so basically he's saying the data that comes out 4 times a year is the only data that matters. Yet the other 99% of the time, none of that matters. It doesn't count. It doesn't count. I'm here to tell you, only price matters, right? Only price matters. Now we got some issues here in SoFi, and let's continue on evaluating SoFi. Let's reset. Actually, this will still be green, but let's reset for the sector and the stock. So this SoFi, as much as people want to put this into a different category, is in the financial sector. It is in the financial sector. I see so many posts that are like, this is a tech stock. It's not. It's a financial stock. It has not quite crossed over on breadth yet on that sector. It's really close, but it hasn't quite crossed over just yet. And if we go over to the financial sector, here, because it is still bearish, It's in the meme stock sector. Yeah, it's in the meme stock sector for sure. And then we're going to get lots of hate because anytime I call SoFi a meme stock, all the SoFi bros come to town and say, no, don't you understand? They're changing everything. By all means, leave your comments down below. We do have a positive move up, more uptrends in the financial sector. So it's kind of conflicted right here. It's conflicted because we see it hasn't crossed over on the number of buy signals, but it is getting more uptrends. So because it's not both green, it will remain red for me. It will remain bearish. Now let's go look at the fear and greed in that sector. The fear and greed in this sector, it's been flat. In fact, let's zoom in slightly. Let's zoom in slightly. Not just flat, it's declining. It's getting more fearful, less greedy. More fearful. It's not much, but it is getting less greedy. So because of that, I'm not looking here. No way. The whole sector's off limits for me. Now let's go look at the SoFi stock, right? It does have a big, beautiful trend with a 10 over 20, price over 50. However, we're seeing some sell signals come through, right? A sell signal here with a buy signal with another sell signal. To me, that's a red flag, right? When the systems, when the algos are working behind the scenes and they're saying buy, sell, to me, that's not what you want to see. You want to see a buy signal that just lasts, right? And we're sitting on a sell signal at the moment. In fact, these signals have generated only 226% returns. That's not too bad. So the trend is bullish, but the signal is bearish. Let's go look at the fear and greed on SoFi itself. SoFi itself, it's going down. SoFi's greed is waning. It's getting more fearful. So that's going to stay red. And we might have noticed it a moment ago, but we do have an outlier block right on top of SoFi right now. If it can close above this price, above 21.56, give or take, 21.60-ish, let's just round it up. If it can close over 21.60, this order block will end, but that's a big if. This is an area where people are looking to take profits right now. And if you are holding it, you might run into some issues. So look at this. Like SoFi is absolutely a sell to me. SoFi is absolutely a weak sell to me. SoFi bros, by all means, go to town in the comments down below. Tell me how wrong I am. I don't understand the stock, etc., etc. I'm just basing this on the data that I can see right in front of me. Now let's go to my final. I'm not going to buy the stock even with your money pick, and that's Palantir. It's Palantir. If you can believe Palantir, I wouldn't buy it right here. Now, I made a ton of money on Palantir earlier this year. I made so much money, it would make you sick. It was awesome. It was on this May 9th buy signal right here. May 12th buy signal. It didn't look like much on here, but boy, I tell you what, it sure made my bank account very happy. But let's go look here on Palantir. So let's go first to this sector. We can see we are getting more buy signals. So we do have that crossover here. And in fact, let's go to the tech sector here. We have the crossover. Right there. So more buy signals coming through. Let's click our donkey channel button. And we can see more uptrends are coming through as well. So actually breadth looks pretty sharp on Palantir. Breadth looks pretty sharp. And then we look over here, we can see the sector fear and greed score. Oh, is it actually increasing from 61? Yeah, fear and greed score is actually increasing. Can you believe that? Ooh, look at this. So we have 5 of 5 so far. Let's go look at the stock itself. Has a sell signal. Okay. Has 1,635% returns following these buy and sell signals, by the way. Sell signal. So that's not going to help anything. So that's going to stay red. It is in a bullish trend. Where is my Palantir button? Right there. Definitely a bullish trend. We can see 10 over 20, price over 50. Okay, so bullish trend. Fear and greed on Palantir is going down. Fear and greed on Palantir is going down. People are getting more fearful running up into earnings. People are getting way more fearful running into earnings. So we're going to keep that there. And then you might have noticed that it's absolutely inside of an outlier block right here. Absolutely inside of a strong resistance outlier block. So of this falls into weak buy category for me. Weak buy. Not weak sell, but weak buy. For me personally, earnings are extremely risky, especially with Palantir. Why do I mean that? If you remember, especially with Palantir, it had this giant move up after earnings in February. I remember when that happened. That was a big deal in the finance YouTube space. And then Alex Karp sold some shares and it went straight back down. So that move evaporated, right? Earnings are extremely risky because just as likely as it did this giant up move, it could do just as likely a giant down move. And for me, that's not worth the risk. That is not worth the risk at all on this stock in particular, because I don't have that much conviction in the stock. Now, you may be convicted to the hilt on Palantir. And if you are, let me know in the comments down below. And if you're ready to save time, make money, and start winning with less risk, click one of these two buttons and have a fantastic day.